Hello friends. Welcome to Cliff News Knowledge Series of Mutual Funds. What is ELSS fund? ELSS funds are equity funds that invest a major portion of their corpus into equity or equity-related instruments. ELSS funds are also called tax saving schemes since they offer tax exemption of up to 1,50,000 rupees from your annual taxable income under Section 80C of the Income Tax Act. As the name suggests, an ELSS fund is an equity-oriented scheme with a mandatory lock-in period of 3 years. In recent years, many taxpayers have turned to ELSS schemes to avail of tax benefits. If you invest in ELSS schemes, then you can avail tax exemption of the invested amount up to a limit of 1,50,000 rupees. Further, the income that you earn under this scheme at the end of the 3-year tenure will be considered as long-term capital gain (LTCG) and will be taxed at 10% if the income is above 1 lakh rupees. A minimum of 80% of the total investable corpus is invested in equity and equity-related instruments. The fund invests in equity in a diversified manner across different market capitalizations, themes, and sectors. There is no maximum tenure of investment. However, there is a lock-in period of 3 years. Tax exemption on the invested amount under Section 80C of the Income Tax Act. Income is treated as LTCG and taxed according to the prevalent tax rules. As mentioned, Section 80C of the Income Tax Act offers tax deduction benefits on the principal invested by you in an ELSS scheme. There is a cumulative deduction benefit, which means that you can avail a tax deduction of up to 1.5 lakh rupees under the above-mentioned section for investments made in all instruments specified like ELSS, NSC, PPF, etc. Further, these schemes have a mandatory lock-in period of 3 years. Therefore, on redeeming the units, you receive long-term capital gains or LTCG. These gains are not taxable up to 1 lakh rupees in one financial year. Any LTCG above this limit is taxed at 10% of the gains exceeding 1 lakh rupees without indexation. Why should you invest in ELSS tax-saving mutual funds? Most ELSS funds invest across a diverse group of companies ranging from small cap to large cap and across various sectors. This allows you to add the element of diversification to your investment portfolio. Most ELSS schemes allow investors to start investing with as low as 500 rupees. This ensures that you start investing without having to accumulate a reasonable investable corpus. While you can invest a lump sum amount in an ELSS scheme, most investors prefer the SIP method as it allows them to invest in small amounts and avail tax benefits along with an opportunity to create wealth. Additionally, you can invest as much as you want but can avail tax benefits as limited by Section 80C of the Income Tax Act. Also, you can choose to stay invested after the stipulated lock-in period of 3 years for as long as you want. Thanks for watching. Please subscribe, share and like to our channel. Thanks again.